Hello friends, we are back for a quick review of the structures and the location and the model we are expressing here. On the right side, we have 36-point Renko chart, which we said is going to be used for describing the trend intention. And we also have this 33, 160 and 200 EMA of a VWAP, which is this fat maroon line going on. As you can see, and then we also discussed impulses against the trend, where we are finding the average reactions of the algos. And then we also talked about the impulses going towards the trend. So when we are going towards the trend, those are pretty elongated impulses, and when we are going against the trend, these impulses are contracted. This is just a method of finding some evidence of where turns might potentially come, so we know that we don't have to take any biased position until that time has arrived. So if we go from here, we're getting some impulses, we talked about it, and these impulses also shift like a phase shift, and they also double in size too. If you have taken that impulse, that means right now if you double it, we're looking at 40 to 25 area, right? So we just mark it on your chart and keep an eye on it. So that is what we discussed. We also discussed finding the height, the distance between this average. Let's make this bigger. So we are looking at these impulses, right? This is the impulse too, it's reaction. Now as you can see, the trend is going down. The reaction against the trend are going to be smaller. Reaction towards the trend is going to be much easier flowing and elongated, as just you can see that. And eventually it's going to turn. So we can put on the pivots, pivot to pivot, pivot to pivot, pivot to pivot, do some anticipation that this is the reaction point, right? So this one, this one, this one, because algos have an objective and target. They don't just don't rotate, they are rule-based systems, right? So this is one easy way to detect those impulses. They are working here as well. It worked here as well, as you can see. So eventually these pulses will shift as they change the buying and selling program objectives. They shift those ranges, and also implied volatility in the market shifts those ranges as well. All right. Now the anti-impulse in the uptrend is going to be the down ones. So if we get a one decent reaction first, then we can start tracking that. Right? As you can see. So this possibility market might just go to this level, which will also be a retest of the moving averages. So that, I think, is what we discussed a few times earlier. We also wanted to check the height, right, away from the mean. This is just, we're generating a mean of a VWAP, long-term mean. Trend is pretty much obviously high. High means on the long side. And then we measure the heights. So for that, just for synthetic reasons, find out the maximum height it went down and rotate that also. So they are getting two heights, right? Reactions. Now it is not 100% opportunity to trade that way, but it's better than not knowing the targets. This is one effective way of knowing the targets. And we just keep on moving in this direction. So now this one is there, it went a little higher. This one reacted. Now which one to use, 160 or 200, this is just a rough estimation, right? We're just getting the areas of reactions, even though trend is up, right? So getting some reactions. All right. So you got that story, higher time frame, slower time frame, big impulses, big areas. Then we talked about drawing the trend lines and passing them by breaking all the laws of retail trading. So let's remove all drawing, recalculate all indicators. All right. So the market has reset itself. So it's looking at this data and then it plotted and analyzed where the market makers were, where the balance points are. So you're back in this action again. Anyway, so let's talk about the second part of finding the reaction points. And we talked about just beaming from major highs and lows where the price has crossed these two balance points. So what we do, we just start from here. This is where the one cross is, right? Right here. It's very steep. Market went down, it crossed here, but we cannot track that, right? So it is happening real time. So we have to look for these highs and lows to pass it to the other ones. Market passed here, it passed here. So I will draw these from here. I'll draw it here. When market is coming down, I need to see where it can potentially stop. So I use this point and use this point, but there's nothing else there. And then there's a potential it will turn here. Then we have the oscillator. And then if you look on the right side, and if you have marked your charts, this is also a reactionary point on the higher time frame. Higher time frame where we have slowed down the frequency of its processing, right? So came pretty close. So building some evidence, should I be taking risk or not? So we can anticipate that this reaction is going to hold at least one more time, and we can also do the average reaction over last couple of days, right? You can also program this, get it programmed if you like to, so get those reaction points. And now we're just looking for an opportunity. All right. But you should also notice there why market always comes back to these points. Because they jump from these points to this point to this point. But they are not going to tell you they will jump one or two. Right? So that's why we should always, what we discussed earlier, is to mark these areas on the things we are posting. If you need more things to be posted on, let us know. So every day by day you just post it. Day by day you post it and save your charts. Post it, save a chart. New data comes in, post it. So what I'm interested in doing is passing my beams through this. We also discussed if market is in this zone for a long time, you treat this as a square and pass the data in the middle of the square. So if I take this as a square, halfway point is here, so I want to beam my line from there. From this high, I'll just beam it like this. Right? There we go. So the setup is correct. All right. Let's do more. Let's beam this. Now I'm passing market. It did not go sideways here. It just passed a couple of bars. It passed through. I'm passing right in the middle of it. And what am I expecting? Expecting market to come to this level. And why I'm waiting for not this level but this level? Now this is where the right side always wins because this is a larger time frame. If you look at this guy, if you roll it on this guy, it's saying, hey, let this market come close to these edges. Edges is where the money is going to be made, having less risk, right? So this was the area to make a short trade. We also talked about we are looking at the tops. Look at the top, let it break, come back to it, right? Those are the retests which are very powerful right there. So if the market is having a clear vision, clear sight, no interruptions, then it will just go like this, come to the line, and then get a reaction of the line. If market is already crossing like this and we are waiting for it to go much higher, then let it cross a retest. Always think about retest, retest, retest of something. Something has to be retested. And I will show you there are so many ways of retest. We should be able to, without looking at any indicator, trade the chart. That's the skill which is required to become a professional. This passed here, let's beam it. I'm looking for a top, looking for a top. It didn't catch this one, not from this beam. Let it come down, come back to retest it, let it come down to retest it. See that? So the flip side on these lines are very powerful. This market has exhausted itself, is trying to come back and say, hey, was this move a real push down or not? And then we have our levels too, right? For entry, stop loss. But the bigger picture, if you want to get 1 or 2 trades a day, is pretty clear. Maybe 3 trades a week. All right, so let's beam more. From here, I look for the beamer. Right here is one more. Here comes my beam. Here comes my beam from here. Right here, you can just see it. There's no cross here. This is the cross. Just pass it. Right there. That's what it is. Right. And we have oscillator and we have green level. A lot of things happen here at the same time. Right. All right. So we talked about all this. Hopefully that makes sense. Now let's get back to the basics. So we higher level beams for the edges and the points. Entry. Now let's talk about entry. We're going reverse way. Remove all drawings and let's rebuild it again. Now what's the plan? Plan is pretty straightforward. The traditional trend lines should also be drawn, right? Without the wicks. Without the wicks. So oscillator, market came down, retested, we shorted this. We shorted this at this time, precisely at this point. We were hedged and we shorted this bunch of ES contracts, right? All right. Okay, so this always I think is a good idea to keep drawing your trend lines without the wicks. There's no wicks here on these 2 points, right? Got some reaction. If you do the beam also, right, from other places, just have to be ready for the next day. Areas, mark them where you are going to trade, why you will trade, and find the evidence that your anticipation is working out real time. Now there are other advanced professional tools where we look inside the bar and we have T and inverted T shapes at the contract tracking scenarios, right? That is, once you have a big picture, I will trade in this area only. We just waited all day. We just waited until this 2:30, right? Just wait. That's all there is. Just wait and wait and wait, and then if all the evidence lines up, you do it, the trade. All right. So you can see these guys are going to be 100-point moves, 70-point moves, 70-point moves, 200, 300-point moves, right? 200-point moves, 150-point moves. So these are the bigger areas. Beam are the edges locations where we are going to be interested in trading, right? And then, all right. So now let's go and review our blue labels. All right. Now let's check. Market did something here, right, and came back down. Again, where is the cluster? Cluster of blue lines is high probability and oscillator, right? we're gonna stop one of these lines as we discussed. See, the wicks are coming up, slowing down, stop loss is right there. You want to trade 1 to 10, 1 to 5. It's worth risking small losses for 5x multiplier. So 5 losses are recovered by 1 win. That's the whole game about the market. Alright. So that's the point, right? So if you're taking a shot at buys from this side, you have levels already depending on when they are printed and posted. You're taking a short bias, stop loss is right there, and we talked about it. If this is your stop loss, you need 5x of that. 1, 2, 3, 4. Right? 1 to 4, 1 to 5, 1 to 4, 1 to 5. Alright, one more time. 1, 2, 3, 4. So depending on the time zone, so you got this risk 1 to make 4, risk 1 to make 3, risk 1 to make 5. Here you got lucky this day, risk 1 made 4 and 4, 8. Right? So if you invested $1,000 risk money here and allocated the contracts accordingly, you made $8,000. So that's how it is, 1 to X, 1 to X. Now the futures have to be cautious. You can do options too, future options too. But you have to be on top of your game first. So it makes sense, right? So this is what I was saying, market goes here. This is very close by level. It may not have any interest unless it is a very extremely bullish sentiment. We are expecting a reversal down, right? So this is very small pullback. We don't know they will stop here or not. It was not interest. This was very clustered together, so it went back to the next level. So these will be this is all there is going on. They're jumping from these levels to levels to level. On this day, where did it go? It went to this level, but we don't know. Not just looking at this, we don't know that which level are they heading to, right? This is where we use market maker alternate models. Market came down. This was very close to each other. Came down to the blue level. My point is, they are not just any zones. They have market maker zones, algo zones. If you have interest, start plotting that on your chart. It is most likely going to offer some edge for you. Okay, so market stopped here. Let's see. Let's look at this one. Market was very bullish. You can just see this new bull trend started. This was pretty straightforward. Retest it is that's why we say go long and below this, short above this, long. These are the days when that really works out very well, like long only, long only, long only, and we don't know this is gonna stop here or not. So all thing we have is to find the max stretch from the prior windows. Right, when the trend starts new, the biggest you can see moves we are finding like this, right? Big moves, big swings. When I'm saying this means I'm talking about the height, right? This is the height. So once you have find the height, you just need to rotate it from the edges. This is not a rocket science. This is more of a observing your market, because your market has its own frequency. Now from this, right, we're looking at the height. From this height was reached. We're looking at a big impulses. I should be drawing other way direction, but I'm just measuring the height. Alright, so we are saying this is the potential height is gonna go. Right? Let's try from this height. The same impulse, bigger swings, multi-day swings. And where is the height coming? It's coming right there. Trinket it of this. Right? So big swings, you have to wait multi-days. Small swings, small reactions, big swings. Know all these levels. Very important. It's very simple. I'm just doing it in front of you. Hopefully this is adding some value. So now there's also these, we also talked about this green levels, right? Why are there so many lines here? I made these green lines fat for a reason. These are the 70% of the time they'll hit and reverse from there. 70% is 70%. uh, there are a lot of rules behind it, but let's just mark those green touches, right? If you are in a downtrend, again, big trend, right? If you are in a downtrend, which we are, based on this logic of trend definition we have created together, here is the green level. So it might not go to second level, right? If the trend is downward strong, it will try to go to first green level. If trend is not strong, it is going sideways, it will go to second green level. Here you can see here the trend is downward, pushing downward trend. The first green line was not respected. So it is trying to look for a larger ranges because it's going downward. Trend is going down with a smooth sailing and longer ranges. All right, so here is situation. That's why we have a bunch of green lines and they overlap. So you have to be cautious that, hey, this green line should have worked 70% of the time, but look at the trend and look at the context that the downward in a downtrend, downward ranges are going to be elongated, right? Simple. If you're going downhill with your skates, or you're going uphill with the skates, right? This was the uphill going the skates and easy downward move. Uphill is a battle, easy down move, right? So eventually the trend changes. All right. So reactions away from it, big things I showed you, breaks, reaction points, check those out, mark it out. You'll have like these 4 or 5 swings a month, those areas from where the trend is going to be driven, and you just catch those trend directions. So now keep this on the because I don't have plotted on the left side. It takes a lot of computation. So our job is to bias shorts, right? Bias shorts. If you come in the morning, it is going there, don't worry about it, let it go. If you don't have a beamer, plot it. Beamer can be here. There can also be a beamer here. Right? Right here, I'm passing it through this. So we have a context and the oscillator, right? Oscillator is the very last thing, and this is not a normal oscillator. Anyway, so trend is down, expecting downward longer ranges on the downside. Pullbacks, anti-trend, which is upside, is going to be shorter ranges. I'm looking for a downward move. I can trigger it from here, stop loss somewhere here. Maybe you have to try 1-2 times, but you get small loss and huge win. Trading at the extreme edges will reduce your risk and stop losses. Here, trend is still down. We did not reach our level here because trend was so down. Buyers did not have any guts to come and retest any of this cluster area, right? This is also giving us a hint that the buyers are not real in the market. So maybe no trade this day. This day we come again. Trend is still down. It tried to come close to our retesting of longer moving averages. We're gonna look for a short entry when it comes here, right? Stop loss here, short here. Now if you're trading this morning, again, just stop loss 1 tick, 2 ticks, maybe 1 point below this. If it is here going up, let it go. Let it go. If it comes back, stop loss is here, you get in. 1 to 4, 1 to 5, 1 to 8. Right? So it's not trading 10 times a day, it's about trading the location. Perfect locations, heavy duty locations in the direction of the bigger trend around the pullbacks, and entries the way I'm showing you right now. So that is the whole story. Here same thing, now here same thing, right? Now you will have losses too. You wanted to say, okay, trend is still down, let's go short, right? Oscillator is in the middle, there's no evidence. This is also in the middle. You wanted to take a short because you saw missing this, you want to take a short here. The stop loss is fine. You lost 1 time, lost 2 times, just which is fine. Trend is still down officially. You come down here. right? Right there. Short again. Trend is still down. All right. So again, you lose this much to make 5 times, right? So these are the heights for stop losses. You can adjust that. I'm pretty sure everybody has their own models of doing things, but I'm just giving you an approach. All right. So right now, if you look at this area, now this one again, officially, we have to see what's going on. Now market is going sideways, whatever, we can just see it. So now if we say go long and short here, now this is a short area and this is a long area. Long came up here nicely. Market is just almost flat, so it can go either direction. This can go either direction. That's why we say long above, short below. We don't tell you to go long and or short. We have to put this whole context together, which since you're watching this level for 9 months, we are hoping that if you are able to consume these, this is the next level. You may have your own trend indicators, right? Where you know, hey, this day I'm gonna just go long, right? So these levels might be consumed that way. All right. Now comes the reactions also, right? It is all this analysis has to be just keep on happening non-stop. From here, let's get it. The reaction should be, this was action, the reaction will be on the other side. Action, reaction, same height, right? Boom, height is here. Expectation, go short. Look at the oscillator on this side, oscillator on this side. Now market has already moved here. So what are our plans? Plans are pretty simple. We just want to take a very strong bias after we qualified in one direction. Short here, long here is posted. You have to qualify this the way I'm showing you some techniques. Which direction you want to go. Oscillator says go short, which is fine. The reaction is also coming from this last impulse at this level precisely. Short has a better bias. So shorted here, market never went here, never came here, never came here, boom. It came here, gave you some pressure. Just you're hiding just a few ticks behind this. If you got ticked in, doesn't mean you have to not try again second time. Right? Now you will say, oh my god, this is like 15-point stop loss. Okay. But how much are you making? So, because remember, you can qualify this to, so now to be very precise, we have to look inside the bar, how the contract, excuse me, contracts are flowing. That is the next level of going deeper. But the context and direction has to be set somehow, somewhere. Whatever models we have to follow Banks model. So that's what we do. Excuse me. So you got saved. There's some threat came, right? So if my stop loss range is, let the market tell you. These things adapt according to the market. Then I'm going to take a shot, right? So professionals get stopped out a lot, but one trade, they're all catching the big trades, right? If they take 10 losses, it's all wiped out by 1 or 2 trades. That's why I keep saying in 22 trading days, you should be winning 18 net days. You can expect 4 days losses. It could be one or many contract, right? The overall numbers game should be like this: 1, 2, 1 to 2. Came back again in the middle of the night, short again. Why? Reason is pretty straightforward, that we have still not done any average impulse. So you have to do a lot of, it's not complicated work, but you have to be on top of it. If you're trading 2 things, 20 things is hard to do this. 2 things, you can just be on top of a game every day, half a day, every night. Doesn't take, I'm just doing it in front of you, takes few minutes, right? If that is the approach you feel like is suitable for you. Alright, this is high level only. We get lower level details in private seminars. Coaching, mostly we coach the big institutions. Never ventured into retail coaching, but you got the idea what's going on, right? So I'm just giving you think what impulse is. Now, one thing you can always do, because sometimes we can get confused, because look at this range, right? Look at this range. It's 4002 to 6 to do, right? So maybe we can bring this range inside here. So what we can do, we can just say, hey, this is my range I'm playing. So we can start from here, and I'm just going and looking at the right side where the range ends. It ends here, right? So we can bring this stick from the high time frames onto my execution time frame, just to measure my ranges. I see ranges. Whatever it takes to help our mind not to be confused, that's all we need to worry about. Now, these are just simple. When we teach the professionals, this is all done in like first 2-3 hours and maybe 4 hours. That's it. And we're doing this for 9 months, but we start adding more things just now. So this is the bigger range, right? So this is a bigger boy. So we brought this small impulses here, just make the different colors, maybe maybe a little bit fatter, maybe different colors, just to enable you to succeed whatever it takes. There's no fast rule. Now let's go and do this bigger range. So let's draw one more line. They are just measurement sticks. So I'll go the height on the right side. I'm just trying to sync up the cursor to the height. There it is. It's going to be a large one, and it goes all the way here, right? There we go. So I got another big stick here to focus on. And let's make it a different color. You don't need indicators. You just need measurements, right? So we got this measurement. We're expecting market will come somewhere here. Where we got this measurement from the big impulses I showed you. Big impulse here, right here. Big impulse here, right? So they measured. So big impulse here, and this is where market went. This is where your flow comes in, right? Flow doesn't happen first. Flow happens second, because somebody has made a decision. This is a good time and place to trade. It could be any kind of variables they're looking at: fundamentals, operational, hedged, derivatives, algos. Measurements are there, right? So we just giving you the easiest way to do the measurement. So now the stick is there. So where is my stick? Stick is right here. So from this movement in time, as we can see, the trends are happening. I'm just measuring. I can measure from here. Then I got this measurement. This measurement got me here, right? If I move it from here, it got me to the next level. So I hope this helps. So let's conclude this business today and rejoice in the glory of the universe and why we are born here. All right. So whatever dreams we have, we need to work hard on them to achieve them. That's all there is. So based on this guy, or this guy, or this guy, we're getting levels. So just mark them high level. From here, I don't know it's gonna go there or not. It could have gone 1 day or 2 days, or maybe take a month to get there. But I just want to have my cautious notification ready when it happens, right? Just block it, the range. It's not a tick, right? So once we get there, we know if the reaction is coming, what do we do? And we qualify by going deeper and deeper and deeper, right? So this is where the banks are at. This is an overflow segment, right? Remember, we are going from Renko to time bars. So there's a extra noise which is not there in Renko is showing up here. That's why there's a little bit of faulty ranges, but this is higher level ranges. So we're just finding with these reactions, action and reaction points, right? You can do it here. You can do it anywhere you want. You can just do it here as well as we talked about it. But rankos are designed for what I just told you, to identify the trend. Which trend are you in? So if you ask, somebody is asking you the question, Mr. X, what does the trend look like? Right now, if you ask the question, trend is up, having a slight pullback, right? Trend is still up. Now, if you ask me which area to trade, how to trade, I just already showed you all the tricks, right? This is very, very high level. First 4 hours of professional training just goes like this. All right. Thank you very much. And then, why did you stop here? Why did you stop here? Those are the advanced questions, and we have advanced tools to answer those questions, right? But I think hopefully this is helping, making sense. How to use what is posted here. Same thing, right? The same model, same approach, same idea, using the structurally correct approach. VWAPs and VWAP averages and the market maker levels, banks levels, right? So that means we have a foundation in stage 1 out of 10 or out of 20. Stage 1 is sound, right? Thank you.